If you're closing deals, but your pipeline always feels fragile, if every month feels like you're rebuilding instead of stacking, you're not growing, you're resetting. Welcome. This is Elevate with Enbody. I'm your host, Tim Enbody. This podcast, this episode especially, is for all my mortgage loan officers and realtor friends who want to build something that actually lasts. I'm not going to bring any hype, guys. No shortcuts, just the truth about what compounds in this business today. Closings. They're transactional for a lot of you. Careers are not. Deals pay today. Trust compounds tomorrow. If you understand that concept, you're going to love this episode, so stay tuned. If your business depends on consistently finding the next deal, it will always feel unstable, no matter how good the market is. And I think a lot of us find ourselves in that trap. And so when you're in that, I'm going to call it the reset trap, actually. When you're in that reset trap, you're Monday, Tuesday, January, February. Have you ever heard this from your sales manager? You're only as good as your last month. You know, you close 3 deals. I closed 3 deals last week. Great. What'd you do this week? Well, shit. But I just, you're so happy to celebrate, but you're like, you feel like it's like Groundhog's Day. There's 2 really important things you need to understand. Are you transactional? You get the lead, you close the deal, you move on. The other slows down a little bit because you're building trust. You're building confidence. You're building a long-term relationship. I call this your data bank instead of your database. When you become a transactional anything, especially we're going to talk about realtors and mortgage loan officers right now. I don't care if you're a bank LO, a credit union LO, if you're a broker or a lender. This applies to all of you. So this isn't a you guys, us guys. This is all of us, okay? So when you do business that way, you get what you ask for. When you put yourself in a situation where, you close this deal, that's done, Mr. and Mrs. Smith, deal 101 for the month. You close this deal, it's done, Mr. and Mr. Jones, deal 102 for the month. Where the money is in this business, especially, it's building relationships with Mr. and Mrs. Smith and their 3 kids, their 1 dog and a cat. They moved into this neighborhood from the other side of the state. They got a new job. They're They're going this. They're going to go to this school. They're looking for this, and you get to know those things. Which one do you think is going to pay dividends? Which one do you think you're going to get referrals from? Both make money, don't get me wrong, but one compounds. Why do you think credit card companies are in existence, by the way? That compound interest is powerful. Transactional producers don't stall because they're bad at sales. Let's talk about some of the best salespeople in the world. The high pressure, high go sales, which could be like your timeshare sales. There's a reason why they give you these free vacations, people, because they're going to get you. But do they care in 6 months if you cancel? Do they care if you walk out, right? They're transactional. If they slow down, they might have a better chance of getting referrals, more clients, etc. But that's not how it's built. But in our industry, unless you're consumer direct, we don't have that opportunity. And all you realtors out there, none of you have that opportunity. So I understand that too, because we're not the big online shops. We're not the big box stores. We are building relationships, but you do get in trouble when you try to be transactional in the process. It's bad. They stall because every month starts at 0. New leads, new trust, new effort. It doesn't feel like you're growing. That's why it feels like you're constantly in this resetting motion. And it's really, really hard. Don't feel bad. It's just you're not aligned. And it's part of the mindset. This isn't a mindset. It's just math. Selling to past clients, someone who already had trust in you. Did you know that has a 60 to 70% success rate? 60 to 70%. If I'm going to call on Mr. and Mrs. Smith that I helped them with a mortgage a few years ago, and I'm going to help them with a refinance, or I'm going to ask them for a referral, my rate of success is that much higher. That's a no-brainer. Selling to someone new is 5 to 20% close. The gap is the cost of not building the relationships. It gets worse. Past clients spend up to 67% more over time because they trust you. It removes the friction. I mean, think about it. Where do you live? How much money do you make? What's your social security number? What's your date of birth? I'm asking all these kind of financially invasive questions, and I trust you with all those answers. Do you think I want to talk to the next person that calls me and asks me those questions when I can come back to you and say, hey, Tim, I worked with you in the past. I felt that you handled this process amazingly. It was a 5-star service. Or I can reach back out to you and say, hey, I know I worked with you guys in the past and I just want to follow up and do a quick mortgage health check. Or I wanted to follow up with you. I know you guys were talking about having a couple more kids and we bought that 3-bedroom, 2-bath. There's a beautiful 4-bedroom, 3-bath on the other side of town. Are you guys interested in selling your current property and taking a look at this one? You're setting them up, you're moving. Wouldn't you rather do that? We can keep talking about this, okay? The cost 5 to 7 times more to acquire a new client. Does that make sense? This is just simple. So if your business depends entirely on new leads, you're choosing the hardest, most expensive way to win. And to me, that's why referrals are king. Past clients are essential. I heard this the other day, and I'm going to give a little shout out for somebody. I don't need to name his name. He's going to hear it. Every loan that you close, those homeowners become mini salespeople. So you think of how much it costs to build a billboard and how much it costs to advertise on the digital ones. But you think of every opportunity we have to close mortgages, either on the real estate side or as a loan officer. And those are all these little mini salespeople that are out there that are working for you and for me. This is how you build your business. This is where most people miss it completely. Referred clients are 4 times more likely to move forward. They are loyal longer. Why? Referrals don't start with skepticism. They start with confidence. People refer transactions to people they trust. You take the transaction and turn them into another referral source. This isn't rocket science. I know maybe it feels like it sometimes, but it's okay. Break this down. Go back and watch it again. They refer experiences. When I worked with Tim, he made me feel X. When I worked with Steve, he made me feel Y. When I worked with that LO at that one company, they did a good job. Which one are you going to work with? Tim or Steve? Not that one LO at that one company that did a good job. You should always use that as a power move moving into it. A lot of you guys, I found this over my 25 years. The market sucks. Cry about it. The rates are high. Boo-hoo. We are in a position now, still in the 5 and 6, 7% interest rates that blow away some of our predecessors or the people that have been in the business for more than 30 years that used to do it when it was in the teens. Homes, we have all-time high in equity, but we also have all-time high in consumer debt. We have opportunities coming out of the woodworks. No one says you should use them. We're just saying build relationships with them. Well, when you're coming out of this and you're looking at these different opportunities to talk to people, what impact are you leaving with them to say, I need to go back and work with this person? When you go back and have these conversations with your past clients, oh, by the way, are you having conversations with your past clients? I bet you're not. I bet most of you do not. I bet you 1% of the people that watch this or this gets referred actually intentionally goes back every year. It touches them with a verbal conversation, a mortgage health check, or a real estate check. Goes back and actually has a conversation about if their families are growing. Who are you working with? Do you know anybody that I could potentially work with? Starts out the conversation with, you know what? I'm so excited to work with you guys. Here's my one objective, to give you 6-star service. 6-star service? So 5-star service. No, I want to give you 6-star service. I want to give you the treatment that Google doesn't acknowledge. I want to give you the wow treatment. We are going to have obstacles and we're going to have hurdles. My job is to help you get the over and around. We're not going to not have them. That's my honest response to you. That's how you build referrals. I mean, guys, this is not hard. It doesn't have to be hard, at least. Businesses get built this way. It's the behavior that you put into your business, not your overall personality. Clients who feel loyal, 60% more likely to choose you again, even when there's a cheaper option on the table, or to give you the opportunity to match. That's not because of your personality. I mean, I might think I have some really good dad jokes, but it's not because of my personality. It's because I dug deep. It's because I went the extra mile to learn. I knew the client's needs. I asked them the questions. In the next 3 to 5 years, do you see yourself still in this home? No, actually, this is a starter home. My company just moved me over here. We're likely to move in the next 5 years, either up because we're looking to have a family, or relocate because my job can move me around a little bit. Oh, where could you possibly go? I don't care where they go. I just want to ask the questions. You can learn to care, but I mean, I want to open this up, and then I'm going to take that information. I'm going to put it in my CRM. Oh, wait, are you doing a CRM, by the way? That's the behavior to build a business. That's not transactional. That's selling with intent to close a deal, to gain a relationship, to build a business, and build a career. See, there's a misconception out there that building rapport is old school. It is old school. That's why those people don't retire from this business. That's why the average age of the average loan officer and realtor is in the mid to high 60s or 50s right now, because old school wins. You can't treat this like it's a transaction. If you want to build your business, you have to do little things. Building rapport is not little, by the way. Some people are scared to death of it. And guess what? That's what makes you different than somebody that maybe answers the phones for a living, maybe goes to and does the brake stamps in the local factory. Building rapport is a skill. That small talk with intention, be a real person, but you're gaining knowledge to your consumer versus it being transactional. Honestly, for me, it's asking the better questions. It's listening longer, and it feels more comfortable. It's understanding what actually matters to the person that's sitting right across from you. Professionals prioritize relationships. 25 to 50% higher profits over time from the professional on the mortgage or real estate side that masters the craft of building the rapport, works their CRMs, works their data bank to build their business, compared to the transactional LO. You know, you bring in a buyer's agent, you bring in a transactional LO to work as a consumer direct person that doesn't really have any skin in the game. You get what you get and you don't throw a fit. And it's not because they're nicer. It's because they're smart operators. There's a reason why they call it the top 1%. It's because they're using all the tools to help them. So a transactional business, you always have to keep hunting. And I'm not saying you shouldn't hunt on the other business, but you're gathering, you're building. That's a driven business. Those people get hunted as well, by the way. One chases leads, the other one earns loyalty. Speed matters, efficiency matters, but if your business depends on past clients, referrals, reputation, long-term income, trust isn't optional. It's a strategy. If I'm going to pull back a bow and arrow right now, and I'm going to go all crazy Fred Bear and just launch that thing, what are the odds of me hitting the target, let alone the bullseye? There's a strategy to it. You practice. So none of you have failed unless you gave up. And if you are failing, you're failing forward. You can actually build this and you can learn this. And that's what we're going to start doing with this show. We're going to start to teach you, and we're going to pull back all the punches. So if you can't take a punch, slide on to some other feel-good guy. The transaction that you're building, you can actually build rapport along the way. We can have some short wins. You're going to build trust. You're going to turn your business into a dominance. The market is ready for you. There's a whole lot of quitters out there. Do you want to be a winner? Until next time, keep elevating your business and your brand.